Natural gas yet again traded bearish and moved towards 3.3 levels before closing the week at 3.37. In our update last week, we have discussed that why natural gas may trade bearish as it is coming out of this channel here. Yes, it has hit the lows. Can we expect net gas to fill the gap left at 3.1 levels? There is a gap left here. Can we expect it to fill in the coming week and breach below the critical support at 3? Or the lows are done as the 3 candle movement is done, and can we expect a retracement from here? What is going to be our strategy in order to profit trading natural gas in the coming week? We're going to see with the help of charts and indicators. This is a weekly review, and I do share my twice a day updates on natural gas with precise levels. First with the Asia and Europe session, next with the US session. The subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live market updates, and join the channel memberships here on YouTube to support the effort. Let's start. First, we look into charts and indicators. Towards the end of this update, I'll be sharing the trading levels, so watch till the end. Now, look at the daily charts or guess what has happened in the last three trading sessions. We have seen a flat bottom. We have seen a struggle at 3.32 levels here, 3.3 levels here, and it appears it has formed a very good support here. Now it is very critical for gas to break below this, and when the week begins to in the next week where the market opens, if it delivers a gap down, you can expect that possibly this is the time that net gas is going to break harder, and we can look forward to a move which can fill the gap left here towards 3.1. So the beginning of the week is going to be, the opening of the week is going to be critical here. Also notice the day it has moved, or it has shown a very good swing towards the last trading session but has closed in red. So this suggests that there could be a beginning on the downside. But my only worry point is the support it is created at 3.3, 3.32 zone, which is indeed a very good support for the day, for the week, for the month. And if it trades below 3.3, you can expect more bearishness to prevail. Now look at the daily charts. What has happened here? The bearishness has got diminished. The moving averages have crossed over here. These are trading with divergence, staying bearish. The prices are trading with divergence from the moving averages as well, which calls for it to start converging. That is the first sign here. Second sign here on the daily chart, see, look at the lows it has created here. It has come out of this bullish channel certainly, though in the near term it was trading with slight aggressive bullishness. It has come out of this as well, and if you look at the near term charts, you can say it is just coming out of this as well. So this is a breakout here, and once it trades below 3.1, you can expect $3 levels, which is a critical support, then 2.94, and then you can also see there is a gap left here towards 2.8 levels. So let's watch out. If natural gas delivers a breakout here, it is going to be a stronger one which can take the prices further low. And see, the stochastic, only thing here is a stochastic which is forming a double bottom, which calls for it to pull back. And if you align this with the current candles, it appears a reversal is on charts, and possibly gas might reverse. Also look at the MACD here. It has hit a bottom, though you can see the lows, highs were at plus 200, the lows could be at minus 200, which is still a notch lower, and it can continue to trade downside. RSI is almost flat and is trading at the bottom here. On the 4-hour chart, notice what has happened on the 4-hour charts. You can see a consolidation which is going on here, and it has to deliver a breakout, and thus 3.3 to 3.35 is the zone it needs to break now. Sorry, 3.4 to 3.45 is the zone it needs to break now. The last trading session we have seen a struggle at 3.45, and I have mentioned very clearly in my update that 3.45, once it breaks, then you can expect the bullishness here, which can in fact take it all the way towards 3.6 levels. But right now I can see a greater resistance. It has waited for the moving average to climb up, climb down, and come down, and then see it is consolidated. Now if it delivers a breakout below 3.3, it is going to be another massive bearish move here. Let's watch out for this. It can possibly take it all the way towards 3.1. Moving averages are trading with divergence, staying bearish, looking downwards. Stochastic is also now looking downwards, while the MACD, after crossing over at the bottom, it is trying to look upwards, and it appears it has got lot much of room on the upside. But there is one possibility that it can try to fill the gap before bouncing back up again. The RSI is comfortable. Coming to the weekly, on the weekly charts, what has happened here? The moving averages have crossed over, trading with divergence, staying bullish on the weekly charts. Now are showing signs of convergence. Still, it is far from crossover here. Very important. Next, the 50 and 100 period have crossed over here, and these are forming a good support at 3.2. So below 3.3, we should note that 3.2 is going to be the next critical support, and then you can find out the gap at 3.1. and then the next strongest support is at 3. So interestingly, every decimal place it is getting a support here. 3 is one critical number which is going to be not only the psychological number here, because we have seen net gets breaking out beyond 3 after a long while, and now it is trying to fall back within this, and this is definitely going to be important and interesting. Look at the move here. Long term charts for last 1 year, you can see this is how it has been trading, and 3 is going to be one critical number which definitely you should watch out for if at all it tries to move towards on the downside. Stochastic has dropped, it is oversold. Now see, look at MACD. After this greater decline, it has retraced. It has taken its time to move towards 5, and now hitting the 5, it is crossed over. Notice this crossover is a bit sharper compared to the rise here. And this is certainly not a good sign. This suggests that the forthcoming candles are going to be sharply bearish. And interestingly, the next couple of candles are going to be very very important, because uh, it is possible that it can trade with sharp bearishness in the coming week. So let's watch out for this. Let's wait for a breakout below 3.3. Certainly you can expect the bearishness to prevail, and then if at all it trades below 3, you can say now the bears are back and we are looking forward to a greater dip in net gas prices. Remember, on the weekly charts it has stayed at the top and now looking downwards, possibly moving towards the bottom here. Coming to the monthly, on the monthly charts, what has happened? Notice the formation here. If you look at the formation in detail, see, first of all, bottoming here, then the rise, then retracement, then the rise, a swing. See, couple of greener candles, one bearish candle, couple of greener candles, a increasingly bearish candle, increasing bullish candle, and then the third bearish candle here. And now the month of May is going to be very very important, because once it trades now below 3 point or $3 levels, first of all where it closes the month, that is going to be of prime importance, and where it begins, because see, once it comes out of this bullish channel, once it trades below 3, you can say we will look forward to a greater price correction, where net gas is going to go all the way towards 2.8 and 2.6 levels, and below 2.6 it is going to deliver a massive blow. And thus, not only the coming week but the coming month is going to be very very important. Also notice, just look at the move. As I said, couple of bullish candles, then a pullback, couple of bullish candles, then a pullback. It appears that the lows for the month are done, and it might try to restrict itself within this zone, that is 3.3 levels. Let's watch out if it delivers a breakout here and a move on the downside, certainly to be taken up seriously. Stochastic looking downwards here. The MACD has crossed over at the bottom, trading with divergence, staying bullish, and this is one point which confirms that, see, it has stayed bearish for months and weeks. Almost couple of years or so, we have seen natural gas not showing any signs of reversal. But since the crossover at this point, I have mentioned it is looking forward to upside. It has moved all the way towards 5, and now see, ideally it has to deliver some smooth move like this, and that is where I say we have to watch out the coming month. That is going to be definitely important, and the levels at 3 is going to be one critical number which you should watch out for. The RSI is now looking downwards after retracement. So now we have seen the charts and indicators. Time for me to give you the trading levels and strategy for the coming week. And before I provide you the levels, if you want to learn this art of trading, join my mentorship. And if you just want to trade as per the signals, you can be part of my signals channel on Telegram. Connect with me, write an email, ping me or Telegram for your queries. And if you're looking forward to a broker which offers you a swap-free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. And see, the next 32nd batch is starting on 5th of May. Do not miss to join it, because it is very very important for you to equip yourself with the tools and strategies which can help you identify the profitable trades with this. Now with that, first let's talk about the levels to buy. I will recommend a level of 3.385 for you to buy. Expect 3.41 and then 3.45. If at all net gets trades beyond 3.45, stay bullish for 3.5, 3.6 levels directly. And if at all net gets trades above 3.6, we are looking forward to 3.72 and 3.8 levels, and if that is taken, stay bullish for 4 as well. Chances are less that it is going to deliver such a strong reversal, and hence I am not going to offer a move below beyond 4. But beyond 4, sky is the limit on the upside. Yes, beyond 4 it is the sky in the limit on the upside. Again, we can expect 4.44, 4.45 zone, which appears a difficult setup as of now. But yes, where it closes the month of April, you should watch out for, and how it begins, The month of May is something definitely going to decide the direction for the next few months for natural gas. I'm still not yet confirming the complete bearishness, the complete breakout or the reversal as long as $3 levels are not taken on the downside. Now, where you should sell, ideally you should wait for $3 levels to be 3.3 to be taken in order to confirm the bearishness for the coming week. But since it is a little far below levels, you can sell at 3.34. But again, I will say 3.32 and 3.3 you should watch out for. If and only if natural gas trades below this, expect 3.26, 3.2, the next 3.2 is the most important level. Below 3.2, expect 3.1, and then below 3.1, the levels, if you recall, which we have followed when it was bearish, 3.05, 3.02, and if that is taken, stay bearish for 2.96, 2.8 levels very soon. I do not expect this to deliver a break towards 2.8 as well. So thus take your positions accordingly, take your trades accordingly. Like, share, subscribe and comment. Join my mentorship batch, join my signals channel, reach out to me for your queries, join the free Telegram channel for live market updates and the channel memberships here on YouTube to support the effort. Thank you. Have a great profitable trading week ahead and a happy weekend. Thank you.